YouTubers, Mike Martins here with the Mike Martins channel. Man, do I have an article and a half for people living in Canada, in the housing market, in the housing situation. We've been covering the housing here 5, 6, 7, 8, 9 years now. Been telling people, look, it's overinflated. Do you make enough? Check your TDS. Make sure you make enough to buy a house. I've been saying it for years. Property market is poison. And I've been transparent and honest as I could with it. And I want to thank everyone that's been sending me letters thanking basically all the videos I put up, do not buy anything videos from a year ago. I made a lot of do not buy anything videos. Well, a lot of people are thanking me for that. Thank you so much for all the emails on a daily basis I've been receiving and visitors here at my shop. Anyways, don't forget to check out the Merit Stalker mug and the Merit Stalker face mask if you want. If you've seen the Merit Harassment series on my channel here, over on Teespring, shop Mike Martins, and links on top of the channel right there. And don't forget to check out Trends in the Housing Market from last week. Really good show, lots of good colors. And Strata Mafia video that's being held back. Check out the Strata Mafia video. Oh, you won't believe what's being told there. All right, the articles from our friends over at Better Dwelling. Bank of Canada pumping billions into mortgage liquidity to prop up real estate. No way, they're propping up real estate? Of course they are. What do you think the first-time home buyer mortgages were? First-time home buyer mortgages. I'm a local Canadian, born and raised, and I have a college degree, and I'm an average wage earner. I make a decent amount, if I do say so myself, but I can't get into my own property. I can't get into my own property market in my own country. Why? Because we sold out. We sold out to the highest bidders, and that's why Canada, Australia, New Zealand, and the UK are competing for rich Chinese investors to come and shadow flip and launder their money. Why do you think they stopped laundering money laundering investigations in Canada? Why do you think they stopped money laundering investigations in Australia through the casinos? Because it's not a good thing to do. Investigating these things? No, you don't need to investigate this. I think you need to investigate our politicians. All right, Bank of Canada pumping in billions into mortgage liquidity to prop up real estate. Bank of Canada's central bank is desperately trying to prop up real estate markets with liquidity. Bank of Canada, BOC, has been injecting billions into Canada's mortgage bonds, CMBs. We talked about this on Trends in the Housing Market. The central bank began purchasing a few million worth of bonds during last year's real estate slowdown, and the pandemic hit. So, okay, let's reiterate that. Real estate slowdown. So September, October, November, December, Q4 of 2019, you started seeing a trickle downwards. You saw it in London, you saw it in Sydney, you saw it in Melbourne, you saw it in Auckland, you saw it all across the Commonwealth. Why? Because the capital flows from China have been somewhat hard to get money offshore, and they're making it even harder to get money offshore from China because they're bleeding wealth. They're bleeding wealth to the Commonwealth. Woo! All right. The flooding liquidity has limited impact on preserving prices, but creates a massive withdrawal risk. Yeah, massive withdrawal risk. Canada's mortgage bond CMBs. Canada's mortgage bond CMBs are debt securities guaranteed by the Government of Canada. Basically, lenders originated mortgages, and then they grouped them into a pool. Remember what happened in 2006, 07, 08 in the United States with mortgage-backed securities that basically were doomed to fail? But this was different. America wasn't being bought out by foreign investing. America has thousands of cities across its country, where Canada has 4 or 5 major cities. Australia, same thing, 4 or 5 major cities. In order to buy MBSs, the government will sell CMBs to the investor to guarantee the funds. The cash flow from the MBS is then used to make payments to the investor holding the CMBs. Long story short, the CMBs are a state-secured vehicle for mortgage financing. So basically, it's a bond. Since the Government of Canada guarantees all CMBs, they pay very little interest. And so, again, anything that's secured and guaranteed, you're going to pay they pay very little trickle interest. But then you got some massive tycoon billionaires in overseas in China. Well, I don't mind getting 0.5% or 1% off my billions of dollars. That's like $2 million a month in interest. I don't care. And then we end up paying for it again through the back end, right? Right. In a normal market, when demand rises, CMB's interest paid falls even further. When demand drops, interest rates typically rise to attract investments. Simply supply and demand, right? Not the country that's gone all in on housing bubble. Again, Canada, Australia, New Zealand, UK, all these countries have basically pinned. If you go back to Trends in the Housing Market, episode 26 from 4 years ago, 5 years ago, how these countries are severely underpinned economies with housing and construction. That's why when we had the pandemic, construction was considered essential business. Why? Oh, well, these Canadians can't even afford to buy these homes. Why is this essential business? Because the foreign investing is going to come in and buy it. Not a country that's gone all in on its housing bubble. When the real estate markets began looking a little tired last year, the Bank of Canada stepped in. They started buying CMBs to improve liquidity. So they're buying their own debt back, right? Which is bankster for suppressing rates. At first, they did it. It was going to be a non-competitive basis, meaning they would start, so they would support the market rates and prevent increases. Starting on March 20 of this year, though, they announced that they would start buying on competitive basis. They now actively play a role in driving mortgage rates down. This drives investors even further away from the asset class, meaning they have to buy even more. In other words, money printer goes brrr. So there it is. So let's reread the sentence. This drives investors even further away from the asset class, meaning they have to buy even more. In other words, money printer goes brrr. So who's paying for this in the long run? Obviously, it's the taxpayers, because governments don't have money to buy anything. They use our money to go ahead and bail out something that they sold us out from. Think about that. They sold us out in housing in the first place. And then they went ahead and, yeah, think about that, guys. So when real estate markets began to look a little tired last year... Oh, oops. We just read that. There's the Bank of Canada injecting hundreds of millions per week. The Bank of Canada purchased billions in CMBs since the beginning of the year. As of July 22nd, the Bank of Canada held $7.95 billion. CMBs up 234 million from the week before. That works out to the balance increase of 1,450% from the same week last year. That's very important right there. What started out as just a few million worth of bonds has turned into a few million per week. Woo! Canada mortgage bonds, CMBs, held by the Bank of Canada. So there it is, guys. So you got there in 2018. Well, we don't need much of that. Let's buy a little bit to get this off the ground. And then boom. There it is right there. 2020 hits. 2020, tail end of 2020. And there you go. Woo! Every week. Mortgage-based stimulus creates two key vulnerabilities. Demand is pull forward and taper a tantrum. By lowering rates, the market doesn't receive new demand, obviously. It borrows demand from the future. So again, we discussed this on the channel. It's like creating the demand first. Like they create the demand first. Here's the demand. But there's no supply. So they're creating the demand without the supply, so it's junk, is what they're doing. All junk is gold nowadays, right? Only so many people are stimulated into buying with lower rates, and it largely just results in higher spending. After the market burns through people incentivized by lower rates, it creates another gap later on. This becomes a whole other problem when the cohort of buyers is smaller due to the borrowed demand. A taper tantrum is how the market reacts to the withdrawal of its stimulus. After all, the market buys on stimulus. It holds back when it disappears. The return to normalized rates is so difficult for the market to accept. It rarely happens, and when it does, it causes another pressure against buyers and lasts just a few months. For example, when the interest rates briefly increased in 2018 and sales dropped to lows. Now, interest rates and a healthy economy, you raise rates adjusted to inflation, so the exports look attractive, the country looks strong and attractive, things look good, right? The Bank of Canada is pumping billions into the market to flood it with cheap money and keep it floating. Despite stimulus, prices are starting to slip in cities like Toronto and Vancouver. So we've been covering that very closely and got a lot of callers in from these cities too. Even worse, with this stimulus is so large, it creates an overhang. The government will have to deal with later. Combined with a payment deferral cliff, and the market is increasingly lining up issues that will require even bigger stimulus to prevent a disaster. So there it is, guys. Better dwelling, guys. Check these guys out. They're really good. So Bank of Canada pumping in billions into mortgage liquidity to prop up real estate is very important, guys. If you want to find more videos, guys, I did a lot of videos here, and if you're just tuning into the channel, don't forget to set your reminders here to trends in the housing market every Wednesday night. We've been going on for years. There it is, guys. That's Mike in the Night every Saturday, and there's trends in the housing market, and we've been discussing what other channels have been bringing up here. If you want to hear it here first, you hear it here on trends in the housing market. And they're fun. Good night, wherever you so here's a little bit of a clip. People call in. 1,000. Let's see if we have a caller here.
Oh, there's Steve the Plumber. Steve, did we lose you?
So we got callers in.
For 1 week out of every month, I force myself to use cash, okay? And I do that so that it brings me back into reality. It's like, oh, geez, wow. You know what? I took out a 20 this morning to pay for a coffee, and it's just like, by the end of the day, it's like, oh, you know what? I got a couple of coins left out of that.
So there it is, guys. That's trends in the housing market. Don't forget to be part of it and join in the chat and be part of the live chat for years. We're not post-dicting here. We're predicting. We don't post-dict. There's a lot of channels doing, oh, these housing is going down. Where were those people when they told people not to buy? Do not buy anything. Go ahead on my channel and type it under search. Do not buy anything. You'll see it for Australia, New Zealand, UK, Canada, and Western United States. I've been doing that for years now. Do not buy anything. But last year, I made an announcement a year ago on every country has an independent video. Do not buy anything. And to this day, people are still visiting me here at my store and visiting me in person. And people emailing me on an hourly basis. 3 to 5 emails an hour. Thanking me for not getting them in the trouble they are. And I am here for you guys. Let me know what you guys think. Comment below. And we'll talk soon. Thanks for watching.